Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to dive into 2019 cannabis trends according to Forbes. What's hot in the industry? On the line with us is Dan Kimmis with Good CBD Products. This is the third annual report detailing the hottest trends in cannabis, made evident by headlines and press releases that published throughout the year. So this dives into the hottest market trends and looks at where the trends are and where they were leading over the last few years. This insight helps entrepreneurs, business operators, and investors navigate the industry. So here's a couple key takeaways from the report. Number one is the sophistication of cannabis brands. So Dan, I've gone on Report 2017 saying that cannabis brands don't matter, that people walk into a store and ask what's the highest THC at the lowest price. So one of my opinions that have changed over the last 18 months is that brands are starting to matter, especially in the vape gate debacle. People want trusted brands. They also want to know what's in their price point. So that's kind of what's navigating them to those brands, not necessarily the brands themselves, but what fits their budget mostly. That's my opinion. But I do think that brands are going to become a thing.
Yeah, it's a game of last man standing, right? Where in the beginning, brands didn't matter, but now a lot of water's gone under the bridge. And along the way, we're seeing people, you're trying to identify with something, and geez, some of the strains come and go, some of the percentages change. Okay, the label doesn't change, right? Eventually you're like, hey, yeah, I want the one with the purple star on it or whatever. And again, this is the thing I like about this is because we have anecdotal records now. We can listen back over time and find out where we're right and wrong. And this is one we're right on, right? The reality is brand, distribution.
So this article goes in to say that cannabis consumers are becoming more sophisticated, and slowly but surely brands are starting to wake up to this new reality, and they expect to see the demand for luxury brands to rise. I'm not so sure that that's going to be a reality yet. I don't think the soccer moms are rolling out there getting these luxury brands, and I'm positive that the millennials aren't spending the money. We see that in reports all the time. I do think that there's a market for a higher end, sophisticated, more discerning customer that wants better ingredients, but they're not willing to pay for it yet. So there's a dichotomy.
Yeah, I think there's room for Lexus. I don't think there's room for Bentley. You know what I mean? And so the whole thing of luxury functional, or we'll say high quality functional, okay, but at the same time, $400 Cannagar just because, okay, in a very narrow set, right? Yeah, sold to the rap guy. So
here's a second key takeaway on the trends for 2019 is that CBD goes global. Legal cannabis may not be a hot commodity right now, but cannabidiol is even hotter thanks to the passage of the 2018 Farm Bill, which legalized hemp and CBD at the federal level. Consumer demand for CBD has gone through the roof. According to BDS Analytics and ArcView Market Research, the market for CBD sales in the U.S. will surpass $20 billion in the next 4 years. Recognizing this demand, Canadian licensed producers are making significant investment in the hemp sector. If the U.S. Food and Drug Administration chose to regulate CBD as a nutritional supplement as opposed to a pharmaceutical ingredient, you'd expect to see high dollar deals as the demand for CBD continues to soar into the stratosphere. I'm starting to see that the price of kilos that were $7,000 dropping down below half of that. So you're seeing, I don't see them in the $4,000 range anymore at all. So $3,000, $3,500, I expect that to drop down to $1,500, $1,800. Within the next 12 to 18 months.
Yeah, and at the same time, I do think, while the jury is still out, the fact is we might all benefit from CBD. And if we all benefit from CBD, that means, quote unquote, everybody's a customer. And that, again, so I'm a believer. Sure, price is diving. And at the same time, I think the reality is going to show that, yep, we should all have some CBD every day. So that's going to be pretty interesting.
I don't think it's going to be like an acai berry that, you get some report and it's like, oh, let's throw acai berries in everything. I think it's going to be more like sugar. I think it's going to be a commodity that is put in literally everything. Your mayonnaise has sugar. Everything in your fridge that's a liquid, that's a sauce or otherwise, has sugar in it. Everything. Bacon is a third ingredient in bacon. It's water, sugar, bacon. And that's analogous to all of American foods. And I would put CBD on par with sugar. I think eventually, because we have an endocannabinoid system, I think CBD will be in just about everything. It's just time will tell.
I'd be in pretty good shape with some CBD infused bacon.
Yeah. We are going to see some consolidation, not just in CBD companies, but in media. So we've already seen that media space is already starting to consolidate. So over last year, we saw High Times gobble up Seattle-based Dope Magazine, in addition to Culture Magazine, Green Rush Daily. So as the cannabis industry becomes more sophisticated, as the cultivation, extraction brand sectors become more saturated, expect to see investment dollars to start pouring into cannabis media. I think you'll start to see mainstream as well. Just a matter of time before all of this comes normalized.
Yeah, again, I get redundant because I think that we're heading toward cannabis business just being business. And so that consolidation, again, when you go look at any other kind of business, that's the process. It makes sense going on here.
And there's going to be more consolidations, not just media companies. We saw a 25% cut in Pax Labs. We saw a huge layoff from Kush.com. There was a 50% layoff for, Weed Maps. And more people. There's even Leafly has a complete freeze on hiring, travel, and expenses. So there's a lot of people really cutting back right now. I think that was
The
consolidation.
The PR is always, we got to run leaner. Now we've got to move to the revenue phase. All of this. I think there is a little bit of a retrench in the industry as people realize just how wild-eyed some of their projections had gotten and such. And at the same time, I think, for people like us, frankly, I think it's good because here's what's happening. The reality, as it comes to the fore, right? The nature of a market that's really looking for revenue, finding the gems because they're out there. It's just they're hard to find. There's so many crew in this industry that are kind of BSing a little bit, Chronic. It's funny.
There's a lot of bullshit in this industry, that is for sure. So you gotta have to definitely make sure that they're transparent and ask a lot of questions, especially if you're trying to sell something. You can have a really good product, but if you don't have distribution, it's hard to make that sale. A lot of people give you pie in the sky numbers, tell you what you want to hear, but just make sure you know what you're doing. One more key takeaway from this report is distribution is king. Cannabis industry is starting to become more specialized. So as well-funded multi-state operators start cornering the cultivation and retail sector, you have savvy operators looking to find success in spaces like distribution. So the sector has the potential to grow tremendously over the next 5 years as states like Oregon consider laws that would allow them to negotiate interstate cannabis distribution deals. And again, I just think from California's perspective, going from Redding to San Diego is a nightmare. But go to Alaska and you have mountain ranges in your way, islands. I mean, it's impossible not to. That state is already breaking a lot of laws, flying stuff when they shouldn't be, but they have to.
Oh, yeah, this is the thing. When we were talking to Senator Wyden, the nature of some kind of Western region compact that allows essentially state-to-state commerce, it's coming.
It has to. You have to have a good distribution channel because, again, if you don't have the right way to get on a shelf for like 150 different gyms or corner stores, convenience stores, grocery stores, whatever, distribution really is king. Right now, we're starting to see like the multi-state operators gaining a lot of attention in the first half of 2019. That's kind of shifted to cultivation. But in the first half of 2019, we saw a lot of MSOs getting that capital up in Canada, coming down and buying a lot of real estate. So this article goes on to say that the absence of a sweeping federalization bill, states are moving to legalize cannabis on an individual basis. So this a la carte style legalization model has the rise of multi-state operators, which are essentially cannabis operators with money and resources to compete in an increasingly challenged regulatory landscape across many states. So in terms of revenue, the three biggest multi-state operators are MedMen Enterprises, Green Thumb Industries, and Acreage Holdings. Given that a full-fledged federal legalization bill is unlikely in the next few years, it's highly likely that the companies with the capital to operate in multi-states will continue to grow and absorb smaller competitors.
Oh, I've seen it on the whiteboard, right? Where you walk in and you're standing around, and the plan is literally buy up marginal operators across state lines, run red until it legalizes, and then flip the switch and suddenly be an efficient business that's, deployed in 2 or 4 or 19 states.
I think a lot of these early entrants are their first mover advantages were to cash out the capital, their stock options, whatever it was. Right now, I think that you're going to start to see kind of year over year, you already have a 8.8% retracement on residential housing. Commercial real estate is just kind of behind that. In my opinion, I think we're going to see a decrease or decline in commercial real estate, and it's not going to be pretty. So these multi-state operators probably are going to be insolvent. It's my opinion that bankruptcy is going to be a reality for MedMen in the near term because they went out, gobbled up companies and their real estate at a very high valuation, and that valuation is going to crumble fairly quickly. And so there will be an opportunity for someone else to merge, to consolidate, to gobble up, or at least to parse out the assets, the property, plant, equipment, and of course the real estate. But those shareholders probably going to lose as the haircuts get placed on that equity.
The fact is, Mom used to say, being first is awesome. Being first is expensive, right? And, Mom was right.
Yeah, have an exit strategy for sure, because I think even we've already said publicly traded producers, the LPs up in Canada, are in the same spot. They're trying to grow for $1.74, and eventually they'll see 8-9 cents a gram, and so they'll have to adjust, or those shareholders will be left in the dust. But Wall Street is here, so this last key takeaway, or one of the last key takeaways, is that Wall Street has a foot in the door. So the U.S. is grappling with whether to legalize or not. So there's going to be some big bets on cannabis. We're already starting to see some push into Mexico, although the president said that wasn't a priority for him. I don't know if that's political or not, but I do believe that they want the revenue. So once the U.S. is in this legal sandwich between Canada and Mexico, it's just a matter of time. Wall Street's chomping on the bit. You've already seen that the Safe Banking Act went through the House. It's going to go to the Senate before it hits the president's desk to sign. So there's a lot of movement in this sector. And once you have capital, then you can automate, you can scale, you can start merging and consolidating and making big decisions. Manufacturing infrastructure is a big decision. So cannabis is no longer just about flower. Cannabis consumers are becoming more sophisticated. So naturally, the products they use must also evolve. So there's a growing need for companies that can manufacture infused products, vape products, pre-rolls. Multi-state operators are making major investments in building up their infrastructure. And so this could be included in being able to scale up, right? So once you have that capital, some huge investments, then you can automate your pre-rolls. There's already automation for every other business, whether it's beverages or edibles, even agriculture. So automation, scaling up, definitely there. We're starting to see events where you can actually have consumption is on the rise. And so consuming cannabis in public isn't permitted in most states where cannabis is legal. Some states like California do allow for special permits and consumption-based events. West Hollywood just opened up a cafe. So as anxiety around cannabis consumption starts to decline, it'll be very likely that consumption-based events will begin to appear throughout North America. I think this is more of a real estate investment play where people can go in and get those licenses, get the real estate. The revenue isn't that great. I don't know if they can make and sell food on site like a real cafe. West Hollywood can. It's a felony in Washington. I'm meeting with some lobbyists this week to go over a bill that I drafted and hopefully kind of get that into the hands of our lobbyists and sponsors for the House rep and senators and get that past Q1 2020. I'm excited for some consumption events. Dope Magazine founder David Tran he started his own event company, so it'll be interesting where that kind of takes root, having just been acquired by High Times. But I guess we're gonna have to wait and find out. So with that, we're gonna roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe.